Hello everyone. In this video, we are going to go over the journal entries for issuing a bond with our Chapter 10 end of chapter practice question number 5. In this problem, Cullenberg Company issued $640,000 of 9% 5-year bonds on January 1st at face value, and interest is payable annually on January 1st. When you come across a problem, I recommend writing down the main information that you're going to be needing, so that way as you're scrolling up and down, it's easier for you to remember everything. So the bond is for $640,000, and it is issued at face value, which basically means that the amount of cash received up front is going to be the same as the amount of cash that needs to be paid back at the end of the term of the bond. So at maturity, you also will pay back the same dollar amount. Then we notice that interest is payable annually. So in every problem, you want to pay attention to whether interest is payable annually or semi-annually, and when it is payable. And the interest rate is 9%. And we also note that the term of the bond is 15 years. So we're going to go ahead and get started by preparing the journal entry to record the issuance of the bond. So the journal entry to record the issuance of a bond: when the bond is issued at face value, then the journal entry is a little bit easier for us to do. We just need to debit cash, because a bond is a large borrowing, and the dollar amount that we have here is $640,000, and we're going to credit our bonds payable account for $640,000. So on the side, as we're going through this, I'm just going to make a quick note of the same journal entry. So journal entry for issuance: debit cash, credit bonds payable of $640,000. The next step is we need to record the accrual of the interest. So the interest needs to be accrued at the end of each year, so that way we can make sure that we're properly reporting our interest expense on the income statement and our interest payable on the balance sheet. So we're going to record a journal entry for the accrual of interest and also for the payment of interest. For the interest, we're going to debit interest expense and credit interest payable. Your calculation for interest, I'm going to include that up here on the top. So interest is going to equal the amount of the loan, $640,000, times our interest rate of 9%, so we will have $57,600, and you'll notice that this is the interest for the whole year. So we can multiply by 12 over 12 because our calculation is for the whole year. But essentially, this is the amount that needs to be paid every single year for that interest. So in our journal entries, we're going to include in $57,600 for the debit and the credit. And then actually when we're going to record the payment of the interest, we're going to be paying the full amount of $57,600 on January 1st of each year. And the accounts that we're going to debit and credit for the payment will include interest, payable, and cash. I scroll down a little bit so that way we can see the last part of the problem, which is the journal entry to record the redemption of the bonds at maturity, assuming interest for the last interest period has been paid and recorded. So this is just referring to the repayment of the bond at the maturity date. So we have issued a bonds payable, which is a liability. When we repay it, we get rid of the liability, and we're going to credit cash. And because this bond was issued at face value and we're redeeming it at maturity, we didn't redeem it earlier or at a discount or a premium, our journal entry will just be a debit to bonds payable, credit to cash for the full amount of the bond of $640,000. So this is the simplest example that we have with bonds because the bond is issued at maturity. I recommend practicing a lot of the problems from our textbook where bonds are issued at a premium or at a discount.